What's going on, everyone? Big week ahead, blockbuster week ahead. We have obviously central banks galore. Time to keep an eye on US dollar, Japanese yen, trading currently just below 160. Whether or not they're going to set up a hike. Hold on a second. The meeting over here at the end of April, whether or not they're setting up a hike for May or whether or not they kick it down the can is probably going to decide whether or not yen continues to weaken above 160 and then they need some type of perhaps verbal intervention, or if they do set the table to go ahead and hike into May to 1%. I'm going to be watching closely to see whether or not we see any firmness in the Japanese yen. That's something that you all know, going back to this area right over here, the Japanese yen unwind causing massive turbulence across markets. So now's the time to watch that. Going back to December, a lot of people were like, we're going to see a system reset because of the yen appreciation. We were like, no, that's not going to happen. We did say in 2026, we want to keep this on our radar to see what develops. Now's the time ahead of time just to bring it to your attention, not to get sensational about it. A lot of people are sensational all the time, on the wrong side. Yeah, we were looking a lot over the weekend. Joel spent, um, well, over the weekend I spent a lot of time over here, specifically on on Ethereum. So actually, I spent 14 hours over the weekend looking at our V4 on crypto, and the reason being is because a lot of time right now has gone into V4 stocks. So the purpose, I think, of me spending that massive time block over the weekend on Ethereum specifically, and I'll show you if you didn't see the discretionary channel what we were looking at. Um, I'll review that with you right now, and then at the same time, I think that why I did that subconsciously was to show as soon as the stocks V4s were dialed in, which they are right now, that I wanted to go back and revisit Bitcoin and crypto and never get comfortable. And so I want to first start, Joel, by presenting the V4 on the stocks, which and I'm working up to the clock. Guys, all I'm doing is grinding, grinding, grinding. We're about to go live and finishing up here. And I want to show you what we have. And what I want to do is I want to get this out to the community. And then if we're able to make any gains elsewhere, okay, then we'll just go ahead and update it. I look, I don't know if there's different thoughts on whether or not like I think it's time to roll out the V4 on stocks. And if we're able to continue to make any strides at any point in time, okay, we'll just push out an update. Like we're not going to wait. So let me start over here, and then we'll finish this conversation up on Ethereum US dollar, and then SOXL I think enters the conversation ace over the weekend, and that's the only thing that's not modeled here. All right, so let's start with TQQQ, and I would like to be able to get these out to the community here right away. These are what I believe are my final drafts over here. I just want to show you the difference of what we're dealing with. We had our V2 TQQQ, and it's a fantastic template. And then I was showing you, I think this was now 2 weeks ago, what I was doing on the V4, and you could see that there was some improvements over here. I mean, on drawdown and overall return, some massive improvement, except that might not be 2009. Yeah, that is 2019. It's a massive improvement. And then I said, okay, I think we're close. Here's what I believe that we're ready to roll with. And you can see that it's a minor improvement. The drawdown coming down a little bit, the overall return coming at about, they're both fantastic. But again, I think I said, and even over this weekend, when B South was like, could we point to Ethereum in 1 second? Could we get out those V4 CSVs just so we have an idea of what we're working with? And he put out like a CAGR of 94% with a max drawdown of less than 7%. I was like, well, that is a beautiful CAGR, but let's remove MicroStrategy. Let's remove GBTC, and then what are we dealing with? And he's like, okay, well, if we remove those, then we're dealing with just TQQQ, Nvidia, and Tesla, a 74% CAGR with minus 6% drawdown. I was like, that's great, but give me a second because I'm working on this as we speak, and I think I can make some incremental gains over here. And you could see that, well, on TQQQ, we're able to do that. Now, probably commission is not commission, slippage is not included, and it will be on the final ones, and we'll get those out. Here we're looking at Tesla. All right, let's look at Tesla next. I want to review all of these with you before getting them out. And Tesla is a massive performer. You can see that 23%. Yeah, grind is not stopping. We're getting going. We're getting go. So massive performance on the release. You can see over here, look at the drawdown. And this is what I think look at the equity curve. A lot of capture in the very beginning. Now look at the green line on the bottom. Look at the equity curve on the bottom and look at the drawdown. And you can say, well, that's a much nicer equity curve. Yeah, we're giving up a ton of potential capture, but now it's much more consistent. And I think that's something that we want. And the drawdown is cut more than in half. That's massive. So I think that, percent profitable, 28% to 54%. The profit factor jumping up. I think it's much better than the V2. And then I went ahead and so this takes a little discernment from the community. You can't see my screen. Hold on. You should have the full screen now, right? That's the full screen right here. You guys have the full screen. I could see it right here with me. If there's anything that's missing, let me know. So this takes a bit of a discernment. I don't know which on the Tesla is better. I could go back and I can see on the TQQQ, this last version that I'm ready to put out, that's the best version. On Tesla, well, which is better, right? Having 11% drawdown, 5,000% return, profit factor 5.2. Look at the profit factor coming down massively. Look at the trades is less over here. I don't know which is the better version to go with on this. And so, you know what I don't know what we'll do. Maybe I'll release Tesla V4 A and B, and we will A/B test it, and we'll see which one we want to be our primary version. I'm not sure yet. So we can only do so much so quickly. Less trades too is attractive. The overall outperformance here is nice, but I mean, percent profitable is good on both. I think what I want to do, guys, obviously I'm grinding hard here. There's a lot of plates spinning. I feel like Elon. So what we're going to do is maybe we'll look at the smart thing to do will be go over year, and we'll see which one has been more consistent. And we'll just say, well, we have two fantastic things to look at, and we're not exactly sure. GBTC on our current V2, monster template over here. Here is the release, and you can see that drawdown stays the same. The overall profitable, look at the amount of trades, is about the same. The overall profitability moves up. Profitable trades moves up a little bit. It's pretty good. Here's the last run that I've done on it, and you can see now that, again, the percent profitable moving up a little bit. Drawdown moving down a little bit, and overall profitability. But we have two versions. So I'm going to move down to the release that we had over here. And this one has a higher drawdown, a lower profitability, and a higher total PNL. And then this one over here is going to have, so that's, again, we're coming into the A and B testing over here on GBTC. And I'm not even making my own determination. I was just making sure that as of today, we had the V4 stocks, most highly preferred candidates to release. Great question. Well, let's take a look at that right now. So, and work session. This is not, this is work. This is not for entertainment. We're here to put the work in and give ourselves the greatest edge. This is valuable resource here when the hive mind is together. I'm going to go ahead and just look at the two different. We wanted to look over here at Sorrentino and Sharp. So we got comparing a 3.4 and a 0.3 versus 2.5 and 0.3. So the Sorrentino is better on the other. And I just got to go ahead and just, as I'm doing that with you, just see yeah, that makes sense. Look at the Sorrentino with the drawdown over here. I mean, I lean towards this as being the better template by far, but let's go ahead and let's look over year. But yeah, it does. Good call on that. Well, so this is a great question. So CTM, this was the biggest question that CTM dealt with in 2022 as we moved to the mechanical system. And CTM 2.0, by the way, at the height of the bull market in October of 2025, the best performing template was the original version dropped in March of 2022. Now, as you move into drawdown, that's not the case. But the question back then was, are these things overfit? Are they curve fit? And then over the next year and a half, it came to be understood that there's not it's not they forward test, and it's not a question of whether or not they're curve fit. They should be fit, and there's a question of whether or not they're poorly modeled or modeled well. Those are what we deal with. And if you go back and you go back to 2 weeks ago when I first brought up the stocks over here on the daily, it's the time to get these out. I also went ahead and created, let's say, zero filter versions in order for us to be able to forward test those, because you can't go back in time. Forward testing is everything. And I wanted to make sure that right now, here today, they were available so that we could go ahead and have that valuable asset. However, and Brownie Brown did some work going over all our templates, and he's like, look, there's like a slight outperformance when we use no filters. However, it turns out that we don't see we see a true performance with the filters, and these have such high performance value that it's anyway. It was a big concern in the past, and then you should be fitting. Each asset has its own unique structure, and we spent a lot of time pointing out and showing structure. Here's structure on the US dollar, Japanese yen. You could see these trend lines. Here's structure on Bitcoin. Each asset has its own structure, which shows, or I believe points to why each one is fitted uniquely within the strategy. But there's poor modeling, there's good modeling. We have yet to run into actually curve fitting, but we all like the difference here is money management has been added on top of the V2 templates, and you could see the difference. All right, great question, important to cover. So GBTC, again, we do have A and B, and in the spirit of looking at what we were just doing, let's move over and just check out the Sorrentino and the Sharp of each. Here they're dealing with 2.1 and a 0.25 versus massively better over here at the 3.2. Now let's go see back what the difference is. The 20, look at that. That's interesting. Profit factor. And let me just hide that. So the profit factor goes down massively. The drawdown is less. Profit is as well. This one is trading more. I mean, that's fine. Having to deal with, final discernment. FNGD was, and I wonder, I'm going to ask the question now, perhaps actually bulls replaces FNGD. FNGD is the inverse of the FNGU. They had a data switch in 2025. And so here, for example, this trade is open 19% into profit. This is reflecting going not short here, but long on FNGU. We were dealing with a pretty nice template coming up with 2 weeks ago, and small changes. It's relatively close in the same. Obviously, some improvements over here, and we're going to be comparing this, I suppose, um, to bulls. So I'll just jump over to bulls really quick. And there's much less data here, right? This is started in, let me go to the list of trades. You're looking at the last 3 years. So it's a pretty fantastic CAGR for the last 3 years. And here's the, small improvement, roughly the same over here, and 55% win ratio compared with FNGD, much lower win ratio. If I could go ahead and just look what that looks like from 2023, perhaps it'll give us something a little bit better to compare. So let me do that. And so let me just put this in to 2023. It's hard. They're very close. They're very close. The win percentage on bulls is actually a little higher. Bulls is using FANG plus innovation. I mean, I lean towards bulls, but again, we'll iron that out. The point is to get this all out. Here is Nvidia. Nvidia V2, fantastic template, right? It's in a banger right now, 17% catching it. Here was the template we released 2 weeks ago. It's very close. You can see the drawdown improved, the percent profitable improved, max total gain relatively the same, and then pretty much the same over here, but definitely drawdown and overall performance, percent fantastic template. Almost. You can't always outperform buy and hold. Except the thing is, you don't know what happens next. This is of utmost importance. I was listening to Charlie Munger, and Charlie Munger was talking about, the biggest mistake or the biggest curveball people that are working towards and in retirement faces, you never know when the crash is going to come. And if you're pulling on funds and then the crash comes, that sets you back. You still need to pull that money out. And let's say you have, we'll use round numbers to make it easy. Let's say you have $1 million account and you're pulling off that in retirement, and you're pulling off, 7% of that. And then the market crashes, and the market crashes 40%. And it takes, 2 years to recover. All of a sudden your portfolio now is not 600,000. You've been pulling out 7% for 2 years. You're starting now, instead of at $1 million pulling 7%, hoping for 7% of your gains, you're pulling off of, $400,000, and you have to pull off that, drain it every year, as well as now you're starting from behind to grow. I think it shows the value of CTM here tremendously as we move ahead. Nvidia, beautiful template strategy. Obviously, just our best best performer 2025. Holding here now an 18% banger. The volatility is beautiful. Upside, downside. We could see that the release we were looking at 2 weeks ago looked pretty good. Nice improvement on drawdown. Looks pretty solid. Same thing over here. It's roughly the same thing. It looks attractive. Good decisions to have to go off of. Very, very nice. So the only thing that's missing from this puzzle, which I'm going to hold off on, is SOXL. And the reason I'm going to hold off on it is because it's in a moonshot right now. It's in a moonshot right now. And I was telling you last week that on Thursday, I sold my CHPY. I was like, that move was crazy. It was up 4% on Friday. You can't even stay. I couldn't even, let me just bring this up over here as we're talking about it, because it's relevant. And as we're looking at SOXL, here's not the leverage, but SOX, and it's showing that we've seen semis rally for 18 consecutive sessions, the longest streak on record, right? And only other three times in history has it been higher. and it points to those previous times. And I guess what we're focusing in on is as you look 6 months to 12 months out in each situation, why the next 3 months has basically been, squirrely, muddling up and down. 6 months, 9 months, and 1 year out in each other instance has been tremendously, tremendously bullish. This is a huge week. Nvidia is not obviously on the schedule as they report on a different cadence, but we are looking at Mag 7 this week. We're looking at Amazon, Microsoft, Meta, Google, all reporting on Wednesday. And then on Thursday, Apple. Obviously, Apple's, they're not spending money on CapEx, so we don't have to really pay as much attention to them as Microsoft, Meta, Amazon, Google. And one thing that we're continuing to watch is how they're updating us on their spending of their insatiable need for compute, whether or not they have the energy to run it, whether or not they're going to be changing their spending, and what that looks like. Now, obviously, the likes of Anthropic are not here. Once they go public, assuming they go public this year, if they do, at that point in time, they're going to have a massive amount of money, and they're going to need, they don't have enough compute. They're going to need to be obviously adding to this. That's a major, major, let's say, nuance in the markets that we're watching. And if there's a curveball thrown, that could drastically change how we're approaching what is to unfold this year. So we're watching that. SOXL not included. I mean, this isn't even SOXL's release. This has not zero been modeled. Ace mentioned it over the weekend, and I was like, oh, we got to get SOXL and SOXS for the short side somehow into the cadence of what we're doing over here. But being that they're up 17 days in a row, there's no need for me to even focus there right now. My focus was, which I have now, finish this, get this out to CTM, and then roll back over here and look at what's going on in this. I mean, this has been really, really, really March, all of March. Well, I'm sorry, the end of February into March, April, and now we're moving towards May, and we've just been in this really, really the most difficult, I would say, regime that I've ever seen in Bitcoin and crypto for trading our style. The only other one that was closer would be backtesting, and in 2018, as price basically on Bitcoin just flatlined before the 50% dump. I was looking and spending a lot of time, and you can say, well, this is our current model over here, and you could say that this must be long side only. Oh, there you go. Somehow it's just populating now. I don't know why. So they're very close. There's a lot of differences. Hold on, let me show you. So here's okay. Picture's throwing me off. Let me just get this briefly. Man, I just need to take a break here. You can see me catching my breath. There you go. And now we go. All right. So this is, they're almost identical in performance. Now notice that, guys, this was just 14 hours. This was just me expressing the understanding that we have to address this current price action. We have to make sure that regardless what's thrown at us, we're able to adapt and not just get comfortable by any means. My focus, as you've seen, has been on the stocks, our core set. Obviously, I was looking last week at low caps and trying to find a universal solution. I will revert back to that. V4 stocks out first. Obviously, I'm expressing interest in the need for making sure we have the best templates on V4, on Bitcoin and crypto. And then there was also, it came up over the weekend, and just a thought. You guys saw CAR last week. You guys saw, I forgot the name of the company, but ticker CAR, and that short squeeze that just sent it into a euphoric blow off top and then the aftermath. I would also like to have a universal template, whether it's expressed through stocks and or commodities. When we see assets that move in towards that blow off, having a scanner that just shows them for us, and then we have a universal template for attacking that. That, I mean, this is where my mind is, so I'm keep going. So here is, these two are pretty close performers. They act way different. Look at the number of trades, 214 versus 1250 since 2018. Now the profitable trade is roughly the same. The drawdown is pretty close and the return is pretty close. This is including very high commissions. 0.1% on Bitcoin and crypto is very high. That's what it's included over here. So even though the more trades, Avis, thank you. Even though that is a lot of trades, it's being included. Now, one thing that was interesting, or what is interesting about this, not just one thing, was that I pointed out that you could see that this is our current drawdown on Ethereum through this area. And you're looking at a massive 38% drawdown. And moving over here, I'm like, well, this is 20% drawdown. It seems a lot more attractive, no doubt about it. And it's just the beginning world. It's just 14 hours. I don't, it's by no means a product. And so the next thing I was looking at, and I'm gonna put up for both of them for you, is, well, I'll just do it. Here's the buy side versus the short side. I looked first at the short side versus the long side, but I'm going to start over here. And you could see that, this version, the one I was just working with, has a 30,000% return with a 34% drawdown. And this other version is much better. Much, like the drawdown's much less and the return is obviously more. And then this is with filters, I think. I got caught off on a tangent. Actually, good call. It's using only the RSI2, and that's it, and no CTM filter. So yes, you're pretty close. That is it. You're pretty close. That is basically without filters, just using the I guess that's why you saw it over here. I was also working on just our table view. This will be what our new table view looks like with a little CTM flare when we get these rollouts happening, obviously. So yes, good call. That's just the ST2. We could just look right over there and told us, good eye on that. And so one note that I was just making this morning in preparing our presentation here is that, well, the buy side here is superior than the buy side here, but the short side is superior on the other. And take that with a grain of salt, because you could see that, well, there is a value there of using no filters as well. So, and then we turn on the short side for you on each. And I could say, well, short side on this version has a very high drawdown. Guess what? That might be able to be addressed. I haven't even begun to only 14 hours. And then the performance though, well, let's just say it's a work beginning to be in progress. Or let's more appropriately say the importance of spending that time this weekend on it was to say that, well, it's not just like, yes, stocks right now, getting that out to the community is so important, but at the same time, not forgotten, and that effort will be expressed here as well. So that's where we are today. Bitcoin getting hammered today. I don't have any reason. I don't have a narrative to explain what is happening. why the pressure coming off of Bitcoin down heavy today. If anyone does a direction to point me in, let me know. I'm focused here mostly on what we're building, and that is where I'm looking at. And I'm looking for one more chart over here. I just wanted to say, um, up. I mean, ahead of earnings, markets have been absolutely spectacular. Participants split. The Bitcoin conference. I saw that. I don't believe this. I mean, I don't know what to believe, but I saw this also that a bunch of funds were moved to Wintermute and perhaps getting ready for a little shake up over here. Could be normal market making stuff, or it could be something else. I don't know, but you are looking at hundreds of millions moved to Binance from Wintermute. I don't know. Um, but what I see is also breakout retest in play right here, right now. Let's see what's going on. I'm looking forward to seeing the saga continue here as far as what's happening with the Strait. Right now, obviously, one side is saying that the U.S. is saying that Iran is days away from having no choice but to begin to shut off some of its wells. The damage is actually permanent. You could return them, but not to the same capacity. I believe that to be true. Um, and now Iran is like, okay, well, let's forget about what you want and let's just open up the strait and keep the ceasefire. I imagine that the blockade is going to continue. And we're about to find out whether or not the leverage that the U.S. seems to have from the blockade is true or not. So these next few days should be interesting about us finding about, who believes what cards they hold and who holds what cards actually. We got FOMC, right? This week, Powell's last hurrah. Good riddance. For years, I've always expressed how I believe that Powell is just a horrible, horrible chairman. And, letting everything run so hot, printing money recklessly has destroyed a lot of lives. We'll find out. I think that more than the FOMC, which I think the main event of is how Bank of Japan positions for their coming activity, and obviously Wednesday Mag 7 earnings. That's real. Is the market gonna sell off here after this massive run it's put on over the last few weeks, or is this going to be a catalyst for a continued push? That's what I'm watching. Inflation is transitory. This guy was the worst of the worst. His hubris. If you ever watched the 60 Minutes interview, when they're just like, "You just printed money," he's like, "No, well, we didn't actually print it. It was all done digitally, and we'll do it again." Like, absolutely reckless, reckless, reckless. Yeah, I mean, Yellen, though, as U.S. Treasury Secretary, what was the U.S. doing when rates were at zero, not refinancing long-term debt when it could have been refinanced? Like, I don't. I think Stanley Druckenmiller called it the greatest financial blunder of all time. So Yellen, Powell, put them in the same room. They belong there together, and I think that they have done the American people an enormous great service and a lot of damage to a lot of lives. I really believe that. Anyway, guys, like back to work though. I have to keep going because there's so much being done, as you could see. And so let's just next step here though is to get these V4 templates on stocks on the daily, which I now have, I believe, polished up as I wanted. And then we have a couple of decisions to make. We were looking at the Tesla. We got that GBTC as well. Get these out and put in for the next wave that comes. Right now, obviously, we're riding a decent wave here on stocks. We can see that Nvidia holding a 17% banger and strategy an 18% banger. By the way, for those that were doing buy side boost this year, well played on this last banger. And then, you know, but it's time to get this going. So that's where my focus is. I'm continuing to grind and push. And here we are. Have a beautiful day, everyone. God bless you. I'm around all day. Ping me if you need me. I'll see you soon.